Mitch, welcome back. Crypto Leverage Trading Group. A little bit before 1 p.m. We are going to be talking about correlation here really quick and how to gauge it going into the weekend. Obviously, we know Bitcoin moved back above 47,000, much as we have predicted. The question now remains whether or not it will test 48,400, which is kind of where it needs to get before it can launch to retest $50,000. Okay, and what will that impact be on the correlated forks? Okay, if you've been following this channel for a blink, you know how we value correlated hard forks of Bitcoin. The reason why we value these is because they usually move in correlation with whatever Bitcoin does, obviously, right? But the values of them are so spread out. They're much cheaper than Bitcoin, obviously. I mean, you've got Bitcoin Cash below 600, at times below 500. You've got Bitcoin Silver, Bitcoin Gold. You've got these Bitcoin Cash ABC. You've got these. They're all at different price points, obviously, and the percentage movements all dictate that P&L percentage based on their price. So if I told you that Bitcoin was going to go to $50,000 in the next 7 to 10 days, okay, that would only be a 3,000 point move off of 47, right, for Bitcoin, which when you do a 3,000 point move at 50,000, okay, and you designate that rate of return on a $47,000 asset, what if you garnered the same rate of return off, as a percentage, off of an asset that's valued at $500 or $300 or $150, right? Okay, so a 10% move on a $150 altcoin is a far greater P&L percentage win on leverage if the market moves 10% higher than a 10% move in assets of greater value, oftentimes. And you see that, like with Cardano, you see that with inexpensive altcoins. Something moves from $2 to $2.25. It is a massive leverage trade win versus Bitcoin moving from 47 to 48,000. It's a much lower percentage P&L, depending on obviously your leverage rate. But when you look at this, you can see here you have Bitcoin Cash and here you have Bitcoin Gold. So you can see how they have moved in correlation with how Bitcoin has acted here over the last, week, a month, and go all the way back. And we just got this big move, okay, in Bitcoin, right? And then we saw the move here, from here to here, here, all the way up to here with Bitcoin Gold. So that's how it's correlated. So the action in Bitcoin, you do not need to trade Bitcoin, okay? You can use the technical analytics and the on-chain metrics of Bitcoin, recognize its move, and then correlate to lower, more inexpensive altcoins and capture the move with Bitcoin, okay? And so you certainly can trade Bitcoin. There's nothing wrong with that. But oftentimes you don't have to capture the movement of Bitcoin because you have these hard forks, okay? And they will act oftentimes because they are so highly correlated to Bitcoin in the exact same progressionary movement and trajectory of Bitcoin. So if Bitcoin was to come up here to 48,000 and fail again and come back down to 44,000, you can expect Bitcoin Cash, Bitcoin Gold, Bitcoin Silver, Bitcoin Cash ABC to fall off just as Bitcoin has. And that's how you can play it. Takes you less capital to get in. You can buy Bitcoin Cash for $500, $550, $600 if you want to buy it on spot, right? Versus paying 47,000, but you're going to get the same percentage move. However, that percentage move in the market could influence your rate of return dramatically by using the forks instead of Bitcoin. Same thing applies with Ethereum Classic tied to Ethereum, or oftentimes YFI, Yearn Finance, tied to Ethereum. Now, your Yearn Finance usually lags Ethereum by about 24 to 48 hours. So I'm not expecting a really big move. It's up 4%, I think, today. I'm not expecting that big of a move in YFI until tomorrow or Sunday or the weekend, Monday, because it always seems to take a day or two to digest what's happening with Ethereum and then move to ETC.